All right, folks, we've got Stacey Burke here on the Trading Nut YouTube channel. He's about to walk us through his 3-hour window of trading on gold. And guys, this is some expert stuff. We just recorded like a 45, 50-minute podcast. Some amazing knowledge dropped in there. So you've got to go and check that out afterwards. Link under the video. Stacey, welcome to the show.
Cheers, Cam. And again, thanks for having me.
Well, look, it's awesome to have you on because what you've shared has been fantastic. We're going to see something on a price chart now. So over to you. Share the screen and let's get on with it.
Beautiful.
Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With C2A, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed.
Okay, so I talk about high and low and timing. What I'm typically looking for is if you can just in your mind conceptualize pump and dump. Now, obviously, each day will be a bit different depending on where we're at with Monday to Friday, that sort of thing. But the first hour, I'm looking for them to establish the high and the low. So, for example, if they're going to be going up, maybe they're going to be trapping people by getting them to sell into the open or sell into a session based on the previous day's trend, whatever that may be. And again, then I'm also looking at major numbers, 50s and zeros and quarter levels. So I want to see traders being trapped in the wrong direction in heading into the session or in that first hour. So I'm looking at trading the middle hour for each session. I'm looking for MW type scenarios. So either working into a high to sell up high or working into a low to be buying in a low market for the up move. So again, a little bit different than a trend trade, but even in a trend trade, we will still see a stop hunt or a move against the trend and then the opportunity to enter in for the move. So looking at Thursday, we'll look at Friday and today. But the same thing, the most important thing is timing, understanding the timing. So I'm not looking to try and get in right away. I'm letting the market set up and show me what their intention may be. So we want to see some kind of indication of pump or dump. So right off the bat, first thing I do every day is I just draw my highs and lows. And, again, I can use my 15-minute charts for that. We're looking at major round numbers here. We're at double zeros. And what we see happen towards the end of that second hour, just before our 3-hour window kicks in. So again, just to touch base for people who 3-hour window, 8 to 11 p.m. New York for Asia, 2 to 5 a.m. New York for Europe, London, 8 to 11 a.m. for New York, and that's all New York Eastern Standard Time. So people ask me, what about London time and all this stuff? I don't know. Just Google the time. Everything's based on New York time. New York is the 24-hour day. And to me, each window is the same. For gold especially, they're going to move the market on an average day, typically 25 to 50 pips every session. And then as the day evolves, your high and your low expand. So now you could be moving 100, 150 pips from high to low. So they pin the high and they get people shorting into the beginning of the session. They work down into the low and they go sideways and give a little W pattern in the beginning of the first hour. So this was actually a first hour trade setup. But if I'm only trading the middle hour, all this does now is if I come to the screen later, or if I didn't take this move, it tells me that now I'm already looking in the long bias direction. And so the next thing I look for is what's called, or what I will call the death line, something I learned from some guys in the US. The death line is the area where if they trade through that level, everybody's caught. Now I talk about a quarter level. If we bring up just look at the 1-minute chart by itself, I'm looking for where volume's going to be trapped in the wrong direction. And again, this comes back to where they started the pump and dump or the dump and pump. They got people selling down low. They chased the move, the engulfment after the pin. This is pre-market, worked it into a low, locked it in, came back up above, and then traded back into the double zeros. So prior to the second hour opening, we have a pattern within a pattern, something I talk about on my videos. Peter Brandt talks about this. You'll have a larger geometrical shape, and then you'll have a pattern within a pattern that can initiate that stronger, larger move. So when I see a pattern like this, I'm just drawing my box and I'm looking for a measured move as a minimum profit target. Now, this isn't Fibonacci. It's just 100% expansions. I just put numbers in there, and I use a range expansion, and just in simple concept, though, it's basically a 25 pip box.
Hey, want to trade crypto and gold like the institutions? Well, you can, and it's free for 14 days with Sage Strategies, fully automated trading strategies. Check out their live track records for 25 unique strategies, plus they host everything for you, which is perfect for beginners to advanced traders or investors. Simply sign up for their 14-day free trial today to experience it for yourself.
So the second hour kicks in, and we've already got our long bias. We get 3 pushes back into the double zeros before we head into the next hour. Now, I'm going to blow this up a bit so people can see it. This first bar back to the high is the first bar of the second hour. So you're either already in this trade long at the end of the hour on this bullpen engulfment, if you've not entered in that first hour trade, first bar trade. Now, when they go to the high, this does 2 things. It hits stops on people who were short right off the bat, but it also triggers breakout orders. And you'll notice that right away they come back and pin down into traders that are long. So somebody's bought the breakout right away, and they've come back and hit the stops or pinned into that trader, put heat into them before moving away and going 25 pips. Now, this is an example of where the market, for people who are trading longer time frames, the reason why I'm on the 1 minute is because I'm looking to get in at level. So when they go sideways, I'm looking for something as close to or as best fill to the zeros as possible. If I miss that, I'm still looking to get filled in the lower part of this 25 pip box, because I'm at the bottom of a box now where I'm looking at a possible range expansion of 25 to 50 or more. Now, when they've gone higher here, they've gone up, and this is where we're coming back to looking at the daily chart. We're in an inside day, but you'll notice that all these lower highs are sitting here as stop hunt areas, or whatever people want to call them, liquidity, doesn't matter. And then also we have the higher level up here. So as the day's evolving now, the market is expanding and going up. Now, this is an example of where I might have just taken this and I got out 5 pips below 50. And the reason I did that was because I wanted to be done in that first hour, and I was happy to take the 25 pips. And sometimes I'll take the fill price of a profit target 5 pips off the numbers or 4 pips off the numbers, because they'll pin into that without taking out the number. And so factoring in the spread, that lets me get taken out on that initial burst back to the high. Sometimes I look at Asia as they will be a peak formation lower high for the day. Now, this particular day we were inside. So again, no other time frame traders have been triggered or anything like that. They didn't break any daily or weekly levels, that sort of thing. So I'm just quite happy to say to myself, it's Friday. I know there's going to be another trade in London or New York, and take the 25, be out, and be done. But coming back to this first hour idea, they set a high and a low. They hit the stops on the low of the initial rectangle that was in place. That was a failed breakout. So again, if people are trading breakout strategies, if we go back to that 15-minute chart, hopefully I'm not over talking here. When we look at the beginning of that 15-minute chart on Friday, somebody sold that bar thinking it's going to go back down to the low. Now, just going back to our larger time frames, I didn't talk too much about a break in structure, but when they came back up, they took out the lower high. And that's the first indication that we now may be looking at a reversal setting up. So they've come down back into that double zero level, pulled it back, got people pinning down into that, pulled it back, and then the big engulfment candle, which obviously would have trapped traders chasing that back down to the low. That breakout failed, came back sideways, and again, just looking at correlating how price behaves at the numbers, this little, zoom back in, this little bullpen candle at the numbers on a smaller time frame is the entry back in that long direction for the move back up to 50. So first hour gives us our high and low. Again, first hour of the session, but in this particular case, they established that before the session began. They pinned to the high. They trapped traders down low before engulfing it and going sideways at double zeros for a 50 pip move up in Asia. Next thing I'm looking for, sorry, Cam, go ahead.
No, that all makes sense. Yeah, that's perfect.
Yeah. So the next thing I'm looking for heading into the next session now is that the market has made new highs. So again, I'm coming in along looking to be trading in that middle hour. So this is all stuff that's I'm looking how it behaves, and I'm coming back to that concept of pump and dump. I want to see the market at some point kick in and give me evidence of taking traders up high or up or down low. So again, we talked about 3 levels of rise. You'll notice that if this was double zeros, 25, 25, 75, I'm thinking at this stage heading in that we may get something around 75. And if we come back and just again look at our weekly daily setup, we know there was an engulfment the night before from the U.S. session up around that level. So these are all the things that just heading into the session you can be prepared, have a thesis for, and then be willing to, okay, what do I need to see? So I want to see this first hour start to propulse. I want to see them start to come to life. The pumpers, call them the pumpers, whatever. I want to see them start to come to life and get people starting to chase this move up. And you'll notice that on this 1 minute chart, these fills are bull candle bars going away from the low. Every fill, if you're chasing this or if you're buying away from the low. Every time they go up, they're taking you higher, which is a first clue. There's my line, death line. So this is the level where the pump started. This is the area that I expect that if they're going to come back to this level at a minimum. And if they go through that level, now I know all this volume that's starting to collect above 50 as the session begins could now become the trap volume as we head into that equity hour. So the first hour, again, keeps making a new high. At the end of that hour, they go up and make a new high again. So at the end of that first hour, we've got up 75 pips from the low of Asia. London is not opened yet. The end of the hour prints up at that high. London opens up inside. And now what's important is that I see a break in structure, meaning that I see a lower low come into play, like we showed on the 50-minute chart, a higher high at the rollover. That lower low is a break in structure. So we've broken and hit stops or broken the structure of those longs that are chasing the move up towards the high. They go into consolidation, and 30 to 45 minutes, I want to see them be retesting that high. Time frame of that middle hour is that they've spent 30 to 45 minutes working the high or working the low, which we'll look at in the U.S. as well. So I'm looking again, where is my strike zone? First, what I do is I draw a line, a box above the last high, just prior to the end of the hour where they've gone into. And I want to see evidence of them. Sorry, I'll draw that down to the first pin. I want to see them go back up into that towards that 30, 45 minute area. And you asked me about limit orders and whatnot. Often I'll put a limit order up in here around the 30 to 45 minute mark, not necessarily with huge size, but with something that's going to get me into the trade in case I'm not able to get filled or I'm scared to take the trade because this looks normal on the chart, but when it's trading, it may be wicking back and forth and whatnot. But that may be my initial position. I'll put a 15 pip stop in. I talked about if this is right, if I've got volume trapped up high in that upper quarter, there's no way it should go past this area, past up into the next quarter. So 12, 15 pips if I'm filled up here. If I trade on the engulfment, now I'm saying this is the high and I'm going to put my stop above the high. So if I don't get in up here and I end up getting in somewhere down after the 1, 2, 3, you'll notice the 1, 2, 3 is there, Cam, the three little bars back up to the high at the end of the 45 minutes. This is the area where price should trade through and not come back. That's the last level of support, and it should actually stay underneath of that, barring there's no news, nothing where they could come back in 15 minutes and pin up through there or something like that. So my break-even level would be definitely at a maximum. Once it goes down through this level, I want to be at break-even. If I've sold up top, if I've sold in here, I need it to close below this level. Market proceeds to fall through. We talked about that neckline. Sorry, I'll zoom this in a bit. That death line is the area where if they go through there and close through there, it should keep falling and maybe retest back to breakout trade in Asia or the low of Asia. But you'll notice that each one of these, as they pump it up higher, creates a new death line on the last levels of volume that get trapped up high. So effectively, they're pumping it up, pumping it up, pumping it up. They're keeping all the volume up there. The London hour opens. They whip it back and forth, and they go back up into the high one more time. So you'll trap volume up here. It fades, comes down, and retests one more time into the trader who's gotten it right, but they've maybe got in on a 5-minute or a 15-minute, whatnot. And then, boom, it just falls through. And so talking about the types of trades I'm looking for, I know there's movement up, but I don't want to be trading this because you'll notice you're trading this, you're getting 10, 12 pips maybe. Some people may be scalping this. I want to know that they're not going to come back once they've locked in the high. And if I'm positioned in and they've locked in the high, now I know I can keep my stop there and hold on to that position, and they're going to clear all this out. And you'll notice they come back. They get the guy who's long off the W at double zeros back in Asia. Nobody gets a free lunch. The pump starts again heading into the U.S. just prior to the U.S. session in that hour prior. This is the same setup that we just saw in London. They went up and made a high. They came down and made a low. Then the 3-hour window starts and the pump starts back up into the high. They break the structure. Again, we'll zoom it in. And this is all timing. So again, just understanding you're going to give the market that 30 to 45 minutes in that first hour to show its hand. And you're looking for that trade either towards the end of that first hour or into that New York session. So once New York equity market opens, again, whether there's news on the calendar, all that can have a bearing, but this is the same setup. They break the structure. They work it back up into the high. They pin the high one more time. So coming back to that little strike zone area, if I draw my box and the pin, once the pin is there on the second pin to the high, there's my box. If they come up 1, 2, 3, this is a 3-push pattern, 1 push, 2 pushes, 3 pushes. So again, this is a scary place for somebody to take a short, which is why you can put a limit order in, or you've got an expert advisor to take you in with part position, or you're going to wait and get traded on the engulfment back through those levels. So every time you sort of get further away, obviously now you're either looking for this to move very quickly. This is a 50 pip move back to where the death line was. So an example where they just go to the death line and you're just looking at a 50 pip trading range. But if you come back to this 30, 40 minutes, the high and low was set, they broke the structure, then it was 1 push, 2 pushes, 3 pushes back into the strike zone, that little inside bar. You're selling at the high of that range for the session at this particular time. And again, 50 pips. I've had to train myself, shut it down, walk away. That's a gift. That's what you want. You got what you were looking for. Take the trade, walk away. Then, of course, real quickly this morning, we saw a similar setup. The move was down from the beginning of the session. They dropped it down to zeros. So there's no volume collected here. They drop it down, but then they start coming down. So they're still continuing to expand the range. They put a low in place. This is the hour prior to the 3-hour window. They work it back up into double zeros, and they start selling it down into the low. So there's our high and our low in that first hour.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com or there is a link in the description.
And again, I'm not looking to sell the high because they've brought the market down. So we say, where are they trapping volume? They're trapping it below zeros at this point. Could this be a down move? Absolutely. But they've hit yesterday's low. The blue dotted line is yesterday's low. Most of the time, end-of-day traders, when they're triggered into the market, if they've been trading this long enough, you know that very rarely are you in the move that just blows off. They trigger the end-of-day trader into the market. We got 4-hour guys in the market, the 1-hour traders in the market. So we know there are stops. Once this market starts the second hour, they pin the high, which triggers breakout orders. The first mouse is in the market going long. They come down to the low, and they hit the low of the day. They have now expanded the range. We now have a new low. They pull it back. We have no break in structure yet. As we saw in the other ones, we don't see a higher high or anything else. We just see a high and a low and a range. They've pinned the high, they pinned the low. They make a lower high engulfment. So again, people are selling this engulfment, expecting this to go lower. Now, coming back to some simple things just about numbers, 0.75. The market's working back and forth between 0 and 75. 30 minutes into the session, we see the break in structure. We see the higher high. So we got a little bull pin at the bottom. Somebody's bought that, thinking they've bought the low of the day, which they might have. But again, I need to break in structure first before I can start to look at a market for a reversal. We see the break in structure. They come down and they stop hunt into the guy who's got it right, but he's the first mouse. So again, if we're talking about getting a fill at best price and I'm thinking I'm going long, I'm looking at 75 as my fill. So if you're buying, you want to maybe get filled at best price. They go sideways, give you the doji. You're going to get filled 75, 76, 77, somewhere in here. There's our little 1, 2, 3 at the bottom. Again, the little pattern where it should sit on top of. And then the bullpen, if you're using EMAs, that would be a squeeze. Big coil for a 75 pip move up. And you'll notice that Friday night, we had lower highs all the way across here, and they went straight up through that. And now the whole process starts again.
Cool. Awesome stuff.
So basically, just to keep it simple, the first hour usually establishes the high and the low. And then you want to know if you're up high or down low. If you're up high, you're expecting them to work into the high or expand the range and fail for a 25 to 50 pip move in the other direction. Sorry.
Cool. You're losing your voice there,
yeah.
Stacey. Well, look, guys, I think you've got tons of stuff in here that you can sink your teeth into, and obviously, Stacey's just about to tell us once he gets his voice back how to best get hold of him. So, Stacey, what is the best way to get hold of you?
Probably by email, Cam. Sorry, Stacey Burke Trading at gmail.com. I'll do my best to get back to you or answer the questions in the videos, and hopefully help each other get better.
Cool. Well, guys, if you want more, then we did do a full podcast with Stacey, link below the video here, and it is epic. Got to go and check that out as well. Probably want to rewind this a few times as well and watch this a number of times to get your head around it. But thank you very much for coming on the show, Stacey. Guys, do remember, hit subscribe, hit like, and click on the notifications bell. Click all if you want to see future videos like this, and we'll see you in the next one.